Hi everyone, and welcome to Learning with GP, where learning is simplified. In today's video, we are going to work and build up our own personal accounting vocabulary, so that next time we are in a class, conversation, or simply reading some financial piece, we feel like a pro. I'm going to cover all your basics such as liability, equity, accrual basis, etc. etc. Let me know in the comments if there are any terms that you don't understand and I haven't covered in this video. I will add them in later videos. In the last video, we talked about what is accounting and types of accounting. In today's video, we are going to take a look at the accounting equation that forms the basis of all these different accounting types. So without further ado, let's get started. The basic equation for all accounting is assets minus liabilities equals to equity. In some places, it might be written the other way around. For instance, assets equals to equity plus liabilities, but the elements are the same. So if by calculation, if you get a positive value, then you have a positive equity, which is awesome. And if you get a negative value, then you have a negative equity, which is not the best thing. You can find these elements on the financial statement or balance sheet of the companies. For instance, this one here. Okay, let's talk about what are these assets, liabilities, and equity step by step. Assets are basically the result of companies' activities which should, in principle, lead to generation of cash flow, or in other words, you can say that it should lead to financial benefits to the company. For example, let's say you own a bakery, and for this bakery, you buy a piece of land, an automatic cookie cutter, baking flour, etc. Then these will be accounted as the assets for your bakery. How will they be the assets? As these should increase your productivity and should result in generating more profits, which is basically what assets are. Now, assets typically fall into two categories. That is current assets and non-current or fixed assets. So in our bakery example, the automated cookie cutter will fall in non-current asset category, as it's a piece of machinery you bought that is going to benefit your bakery for a period of more than a year. Non-current assets or fixed assets are also known as capital expenditure, meaning spending on such long-term assets which will help us in incrementing our company's capital. These assets are often subject to depreciation, as their value decreases with the time due to usage, wear and tear, obsolescence, etc. Yes, obsolescence is another interesting term that could have befuddled you before, but I got you. It is basically when a product or service becomes obsolete and is no longer going to generate good profits due to change in trend, etc. factors. Depreciation is a term used for tangible non-current assets, such as land, piece of machinery, etc. So basically things that you can actually touch. But in case of non-tangible, non-current assets, okay, that's a mouthful. For example, some patent or name of the brand, etc. The term used to describe loss in its value is amortization instead of depreciation. So don't panic when you hear that one in your next meeting. Depreciation can be calculated in multiple ways. You can check out my upcoming video to learn more about it. I will also put the link to it in the description below. And don't forget to subscribe. So that covers our non-current assets. Moving on to current assets. These include your inventory. So in our bakery example, we can consider the baking flour that we use for baking cookies, cakes, etc. That could be a current asset in the form of inventory of unsold goods. Then you have prepayments. For example, money received by clients for a cake delivery reservation they made. Then trade receivables, also known as debtors. meaning money owed to the bakery by the clients. Bank balance, that will be cash that our bakery has in the bank, as is clear by the name. And finally, the cash balance, that will be cash our bakery has but not in the bank. That summarizes our assets. So that's it for today. In the next video, we will talk about some other important terms for your accounting vocabulary. So stay tuned. Thank you so much for building up your accounting vocabulary with me. It's really fun for me to put this together. If you have any questions, other terms, or want further clarification on any of these points, let me know in the comments below. Don't forget to share it with someone whom you think can benefit and learn from it. Do subscribe to my channel, we have a ton of learning material here for you. And give me a like. So see you until next time. Bye!